Hello everyone, Alan T here. Welcome back to my YouTube channel. You know what's the questions that traders asked every single time when they place a trade? How much money am I going to make on this trade? That's why majority traders fail. If you focus too much on how much money you are going to make, guess what? You are focusing on the outcome, which will make you to risk more than you should. You will lose money that you think you shouldn't have lost if you are wrong. And this will make you to increase your risk further to cover the losses that you made because you increase your risk. The ball keep rolling and eventually you lose everything. Right? The right way to look at trading is the risk first. Always think that how much you are going to lose. You have to train yourself to look at the risk first to avoid you lose all your capital. Now, if you lose all your capital, you are out of the game. You do not want to risk too much per trade, no matter how good you feel about the setup, because you know that the market can do what it wants anytime it wants, right? Train yourself to look at the risk and you will be on the profitable side. Now, for you to become a profitable trader, you got to treat trading as a business, right? Trading is not some exciting game for you to kill your boredom. So you got to see long term, you got to look at long term, trade it as a serious business. Right? When you treat it as a serious business, you are not going to be emotionally attached to the outcome. You will just keep doing the right thing because you know the outcome will come to you. And this is how you maintain a consistent performance, by keep doing what you have been doing over and over again. As long as you have a profitable system, even though with 3, 4, 5 losing trades in a row, you know you are going to be in the profitable side in the long run. I want you to imagine a scenario. Tossing a coin. Let's toss a coin and let's say 50% chances you are going to get the head, 50% chances you are going to get the tail. Imagine if you toss a coin, head you make $1 and tail you lose $1. So after 50 to 100 trades, there's a high chance that you are not going to make any money. You will be at break even. Now, what if you make 0.5% every time you got the head, but you lose $1 when you got tail? Are you going to make money? Now, under these circumstances, if you want to make money, you have to make sure that you have more winners than losers. You have to have at least 70% or even more win rates if you want to make money. Now, is it worth it? For some traders, yes, it may be worth it, but for me, it is not worth it. Now, imagine if you toss a coin, you get the head, you make $2, tail, you lose $1. Now, after 100 trades, you are likely to make money. Am I right? So in trading, remember this concept. You want to win more when you are right than you lose when you are wrong. You can easily have 5 losing trades in a row. Now, because you know that if you keep doing the right thing, you will certainly be on the profitable side over the long run. You will be able to execute consistently. Now, let's look at this scenario. In this case, it's a trade here. We have like 3 pip stops and we aim for 3 pips target. This is a 1-to-1 risk-reward ratio. If you aim for a 1-to-1 risk-reward ratio in trading, win rate has to be around 50% or more. You have to win more to make money with this approach. Now, if your risk-reward is 1-to-2, for example, 40 pips stop loss, and you aim for 80 pips stop loss in this case, so it's a 1-to-2 risk-reward, 1% risk, 2% rewards. Guess what will happen? You need 3.33 winning trades to break even. Right? So in other words, if you have 1-to-2 risk-reward ratio, you can have 6 losing trades in a row out of 10 trades, and you will still be able to make a net profit. How cool is that? So if you know about this concept, risk-reward ratio, then it's very easy for you to be on the profitable side, because you know that you don't have to be right all the time, right? Let's look at 1-to-3 risk-reward ratio. 1-to-3, you take a trade, you aim for 1-to-3 risk-reward ratio. So you only need 3 winning trades for you to make profits. You only need a 25% win rate to break even. In other words, 7 losing trades in a row, it's nothing for you, because you know that out of 10 trades, if you have 3 wins, you are still going to make a net profit. What I'm trying to tell you is that in trading, you don't have to be right all the time. As long as 1 win trade can cover 2 or more losing trades, you are going to make money in the long run. Right? I believe some of you will start thinking risk-reward ratio to 1-to-10, okay, so that I can become rich faster. So you see, when you aim for a 1-to-10 risk-reward, in this case it's 1-to-6 risk-reward ratio, you will realize that the price takes a very long time to reach the target. it took 57 days to reach the targeted profit. Now the price is in sideways for 21 days. What will happen is like 5 days, 10 days later, you'll start to scared, you'll start to chicken out, you'll start to stress out, and guess what you will do? You may close your trade manually here. So in other words, you may get less than what you're supposed to. Right now, few things you must know when you want to aim for a high risk reward ratio. If you're aiming for a larger return, know that the higher the risk reward ratio, the lower the win rate. The chances for your position to get taken out at the loss first is higher. So the price may reach your stop loss before going towards your targeted profits when you aim for a higher risk reward ratio, because it takes longer time for the price to go towards the target, and it will be messier and it's not going to be easy. You may have a lot of losing trades, a lot of break-even trades just to get one high reward trade. Okay, and number two, as I mentioned just now, it takes time for the price to reach your target. Because your target is huge, it may take days, weeks, or even months. In that case, almost 2 months for the target to be filled. So if you're unable to hold that long, then aim for huge reward may not be suitable for you. Remember, the market is always slower than you think. And number three, high reward setups are rare. They are very rare. You have to wait longer. You may have multiple break-even trades again, losing trades just to get one win. You have to get in again and again and again. And if you miss one, then chances are you'll miss the trade. And because you're aiming for high risk rewards ratio, your mental and your psychology will be challenged, okay? Because you will start curious or you'll start worrying, when will the market move? You don't know. So trying to aim for high reward, you may have 7 losing trades in a row just to get that one win that can make you 10 times return. Now, you are still profitable, but you must be able to trade through these periods of losing trades in order for you to have that one big win. If you're okay with it, go ahead. If you're not, stick with 1 to 2, 1 to 3, 1 to 4 risk reward ratio. It will be easier to fill and it will be easier for you to manage your trade as well. The next puzzle that you need to know is called risk elimination. You want to eliminate your risk just like this one. So I have a sell order here. My target is somewhere around here. Now, because the price has dropped enough, I want to break even. How do I do that? I want to eliminate my risk so that this becomes a zero risk trade, risk-free trade. How I do that is I move my stop loss below my entry price. In this case, it's a sell order. So I move my stop loss below my entry price, and this is how I got a risk-free trade. So let me show you the example on the chart so that you have better understanding on how it works. Alright, so let's say you saw a sell opportunity right here. This is Euro US dollar, the price drop and then slowly crawl all the way back to the previous supply area. So for that reason, you want to sell. So you sell here and your stop loss is here. Now, when the price drop enough and your target, let's say your target is maybe 1 to 8 or maybe 1 to 10. Let's make it 1 to 10. Now, let's say your target is 1 to 10 risk rewards ratio. What you want to do is, this is a 1% open risk, right? So when the price drop enough, price drop at one level, you started to think that, you know what, the price have dropped enough. I want to protect my position now. I want to make it into a risk-free. I move my stop below my entry. In this case, it's sell, so it's below my entry. If I buy, it has to be above my entry. Right, so below my entry, so this is a risk-free trade. So when the price keep going down, I will just move my stop further and further away. Now in this case, even if the price go up, guess what happened? I already locked in this amount of profits. I have this much of profits on the table already. It's mine. If the price really take me out, this is mine. Okay, now because this trade is already risk-free and I have locked in some profits, I can now move on and find the next setup. How cool is that? Alright, lastly, you want to know how much risk you want to risk per trade in percentage. Is it 1%? If you risk 1%, you can have 100 losing streak in a row. Okay, if you risk 1% per trade, you can lose 100 times before you're out of the game. Now, if you risk 2%, you only have 50 times. Okay, if you risk 3%, 33 losing trades will make you out of the game. If you have 5%, you can only lose up to 20 times. So traders always ask me how many percent I should risk per trade. If you are new or you are still not profitable, you are not able to make profit consistently, I would suggest you to risk 1%, because the goal here is you to survive this game long enough. You need to be able to survive first before you make money. If you can't even survive long enough, how are you going to make money consistently? Think about it. I would recommend you to stick to 1% risk. First, as time progresses, you will be able to survive long enough, you will gain more experience, and guess what? You will be better at trading. If you risk more, chances are you may not learn enough, you may not gain enough experience, then you're already out of the game. So you do not want that to happen. Alright, use 1% risk per trade until you gain a lot of experience, until you're really familiar with your setup, your system. You know what to do. Then and only then you increase your risk. But I would really recommend you for the first year, for the first few years, stay at 1% until you become really profitable. So again, treat trading as a business. Alright, focus on the risk first. And don't be greedy. Every time you trade, you want to make sure that you are able to win more when you are right than lose when you are wrong. Because by doing so, in the long run, you will certainly be on the profitable side. 5, 6, 7 losing trades is nothing, because you know that at the end, you are going to be on the profitable side. So look long term, alright? Look long term growth and not short term excitement. This is how you treat trading as a serious career. Treat trading as a business. When you treat trading as a business, you are going to make a lot of money in the future. Think long term, and I hope this video helped you. I hope you enjoyed this video, you learned something new in this video. Give a like if you like this video. So my name is Alan T. I'll see you in the next one, and bye bye.